Hey everyone, welcome back to Corporate Decoder. Today, Air Industries G was filing an amendment to a merger agreement, and I think it tells us something important about cash flow and deal certainty. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing is all about smoothing over a recent cash infusion that could have complicated an upcoming merger, and it shows how companies try to keep deals on track even when unexpected things happen. Alright, let's dive into what Air Industries Group, or AIR as they're known, has been up to. They filed this report on the 8th of June 2026. This is a current report, meaning something significant happened that the company needs to tell investors about quickly. They are incorporated in Nevada, and you can see their commission file number and IRS identification number here. The company itself is Air Industries Group, and their main phone number. Their common stock trades under the ticker AIRI on the NYSE American Exchange. They are not electing to use the extended transition period for new financial accounting standards, which means they are staying current with reporting. The main point of this filing is that AIR entered into an amendment to a merger agreement. This amendment is to a deal they already had in place called the Agreement and Plan of Merger. The original merger agreement was signed back on the 16th of February 2026. This amendment, also dated the 8th of June 2026, involves Tenax aerospace acquisition and a subsidiary called Merger Sub. Now, here is where it gets interesting. The whole reason for this amendment is to adjust how they calculate something called AIR net indebtedness. This is important because that net debt number directly affects how many shares AIR will issue to the Tenax shareholders as part of the merger. What happened was that one of AIR's subsidiaries, Air Industries Machining Corp, received a prepayment, or an advance of about $1.97 million on the 2nd of June. This money was for products they were making for a customer. Before they got this money, they had agreed on a promissory note, which is like a formal promise to pay back the money. AIM plans to follow the terms of this note. This advance is specifically for buying materials, making the product, and delivering it to the customer's location in the US. Importantly, this advance doesn't carry interest unless they default on the agreement. AIR subsidiary has to pay this money back by the 30th of November 2026, and the customer has a right to use any money they owe AIR for work to pay off this advance. This is a form of security for the customer, so why is this $1.97 million advance a big deal for the merger? Well, the original merger agreement had terms tied to AIR. Its net debt, this advance, even though it is for specific purposes and has a repayment schedule, could have been counted as debt, changing the final number of shares issued in the merger. By amending the agreement, they are essentially taking this advance out of the calculation of net debt for the purpose of the merger share issuance. This is a smart move to prevent the deal terms from changing unexpectedly due to a short-term cash inflow. It shows that both parties are working to keep the merger on track. This section lists out the exhibits filed with the report, which are the actual documents. Exhibit 10.1 is the amendment to the merger agreement itself. This is the core document we've been discussing. Exhibit 10.2 is the form of the promissory note that outlines the terms of that $1.97 million advance. And Exhibit 104 is the interactive data file for the cover page, which is standard for SEC filings these days. There is a note here that some parts of Exhibit 10.2, the promissory note, have been omitted. This is typically done for commercially sensitive information. The company also states they will provide the full unredacted version to the SEC if requested. This is common practice to protect proprietary details while still disclosing the existence and general terms of the agreement. And finally, the signatures. This confirms that the company is officially filing this report. Scott Glassman, the acting chief executive officer and president, signed off on this filing on the 12th of June 2026. This tells us he is aware of and approves of the information presented. Now, let's look at the bigger picture here. Air Industries Group is in the middle of a merger with Tenax Aerospace acquisition. This kind of amendment to adjust deal terms based on new cash flows isn't necessarily a bad sign. It actually suggests that both parties are committed to closing the deal and are actively finding solutions to potential hiccups. The fact that a subsidiary received a large advance from a customer is positive in the sense that it shows ongoing business and a client willing to prepay. However, the need to amend the merger agreement highlights the complexities of these transactions. It also underscores the sensitivity of merger terms to a company's financial position. Especially regarding debt calculations for investors, this filing provides transparency. It shows that the company is proactively managing its agreements and ensuring the merger proceeds as smoothly as possible. The historical context from recent news shows this merger has been in the works since February, and this amendment is a procedural step to solidify it. Companies like Air Industries Group, with a market cap around $15 million and 160 employees, often face unique challenges in navigating these complex corporate events. The biggest takeaway for me is that this amendment helps maintain deal certainty. By excluding the customer advance from the net debt calculation, they are preventing a situation where the number of shares issued to Tenax shareholders could be unexpectedly altered. This is a pragmatic adjustment that allows the merger to move forward under the originally intended terms, or at least terms that are now agreeable to all parties. It suggests that the core transaction remains intact despite this operational cash event. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this analysis valuable, hit like, subscribe for more, and join our Discord community linked below.